Some of the world's largest Bitcoin mining companies are now signing Bitcoin dollar AI infrastructure deals. Core Scientific recently announced an infrastructure partnership with AMD covering more than 500 megawatts of capacity, with the potential to expand up to 2.5 gigawatts. Part A has also signed major long-term leases for AI data center capacity in Texas. So what is happening? Are Bitcoin miners abandoning mining? Can any mining farm simply remove from ASIC installed GPUs and become an AI data center? The answer is no. But the opportunity is real, and today I want to explain where the opportunity actually comes from. Hello, I'm Arvin from PunkHash. In this video, we are going to break this trend down into 5 simple steps. First, we will look at why Bitcoin mining companies are moving into AI infrastructure. Second, we will look at the assets mining companies already have and why those assets are valuable. Third, we will explain the major difference between a Bitcoin mining farm and an AI data center. Fourth, we will look at which mining sites can realistically be upgraded. And final, we will discuss what this trend means for the future of mining, energy, and compute infrastructure. The main point is simple. The real asset is no longer owning the mining machine. The real asset is the power, the infrastructure, and the ability to turn electricity into renewable compute. Let's start with why this is happening now. Let's begin with the first question. Why are Bitcoin mining companies moving into AI? The simple answer is demand. AI companies need a huge amount of computing power, but GPUs are only one part of the problem. AI companies also need electricity, they need land, they need substations, they need cooling, they need network connections, and they need facilities that can be built and brought online quickly. This is where some mining companies have an advantage. They have already spent years finding power, security, land, building, electrical infrastructure, and operating high-efficiency computing equipment. In many cases, the most difficult part is not buying the service. The most difficult part is finding enough power and getting that power connected and to the site. Electricity demand is now growing rapidly, and the data centers are one of the main drivers. So AI does not only have a chip problem. It has a power of infrastructure problem. And the mining companies already understand power, but having access to power is only the beginning. So next, let's look at what mining companies already have. When people look at a Bitcoin mining company, they usually focus on the ASIC machine, but the ASIC is only one layer of the operation. Behind every large mining farm, there may be years of work and investment. The company may already have land, grid connections, transformers, switchgear, power distribution, and cooling system, network connection, security, maintenance teams, and people who know how to operate computing equipment 24 hours a day. These assets can be much harder to secure than the computing itself. ASIC machines can be replaced, service can be upgraded, but a large power connection, a substation, and a well-located site cannot be created overnight. This is why the market is starting to value some mining companies different. They are not being viewed only as Bitcoin producer. They are being viewed as owner and operator of power-ready compute infrastructure. And that is a major shift. The machine is still important, but the infrastructure around the machine may become even more valuable. But this is where many people make the wrong assumption. The power-ready mining site is not automatically an AI-ready data center. Let's look at the difference. Bitcoin mining farm and AI data center have something in common. Both require large amount of electricity, both produce a lot of heat, both need racks, cables, networks, and 24 hours operations. But the similarities can be misleading. The technical and commercial requirements are very different. Let's look at 5 major differences. The first difference is reliability. Bitcoin mining is a flexible workload. If a miner shuts down for a short period, it stops producing revenue. But when the machine comes back online, it can start mining again. The flexibility allows some mining farms to participate in demand response or settlement programs. AI customers normally expect much higher uptime and service commitments. A large training or inference system may involve many connected services working together. Unexpected interruption can affect the complete workload. This means an AI facility may need more power, redundancy, backup system, and monitoring and operation discipline. A mining site may have enough electricity, but the quality and reliability of the electricity may not meet the customer requirement. The second difference is the networking. ASIC mining does require stable internet connection, but the amount of data moving between the machine is relative. AI clusters are different. Thousands of GPUs may need to communicate with each other and at extremely high speed. The network is not simply used to connect the facility to the internet. It becomes part of the computing system itself. Modern AI artificial can include separate network from the computing, storage, and management. So a mining farm with a basic internet connection is not automatically ready for a large AI cluster. The third difference is cooling. Some people assume that the hydro-cooled mining farm is already prepared for liquid-cooled AI service. That is not necessarily true. Both systems use liquid to remove heat, but the equipment, temperature, flow rates, pressure requirements, and the control system and redundancy can be very different. A hydro-cooled ASIC system is normally designed around a specific mining machine and a specific operating range. And AI racks may use direct-to-chip liquid cooling, the hybrid cooling, and the more complex monitoring. The cooling system must be designed around the actual service racks and the heat load. So having water pipes in the building does not make the building AI ready. The fourth difference is rack design. Mining racks are usually designed to hold many independent ASIC machines. Airflow, cables, and maintenance are relatively straightforward. AI racks are designed around service, switch, storage, power shelves, and high-speed interconnects. However, they are more integrated and they can require much higher power density inside a single rack. Traditional data center racks have often operate at a relative low power density. AI and high-performance computing racks can require 50 kilowatts or more, and some next generation systems go far beyond that. This changes the entire facility design. Power distribution change, cooling change, floor loading change, cable management change, and maintenance producer change. The fifth difference is the business model. A mining company can buy ASIC machine, connect them to the network, and accept the risk of the Bitcoin price and the mining difficult. And AI data center usually needs the customer. It needs a workload, it needs a contract, it may need certification, financing, and a detailed development schedule. The customer may also require the specific hardware, network architecture, skill, and service level. This is why a mining company cannot simply build an AI facility and assume that the customer will arrive. Power is valuable, infrastructure is valuable, but the project is still needs a real commercial plan. So the conclusion is clear. A mining site may have the right power, but that does not mean it is AI ready. Therefore, which sites can upgrade? So which mining site actually have realistic opportunity? I would dive them into three groups. Some sites should continue focus on Bitcoin mining. This is maybe the best choice when the site has very low-cost energy, flexible power, limited fiber connectivity, or location that is not suitable for a high available data center. Bitcoin mining can use energy that may be difficult for other customers to consume. It also responds quickly to change power conditions. There is nothing wrong with remaining specialized mining operation. A strong mining site does not need to become an AI data center to be valuable. The second group may be able to build a hybrid compute site. Part of power can continue supporting ASIC mining. Another part can be upgraded for GPU computing, AI inference, rendering, or other high-density workload. This may be more realistic for medium-sized operator. It allows the site to develop new capability without rebuilding the entire operation at once. It also allows the owner to test demand, improve the network, and develop the technical team step by step. The future may not always be mining or AI. For some sites, the answer may be mining and AI. The third group may be suitable for full AI or high-performance computing conversion, but the requirements are much higher. The site needs large and reliable power capacity, strong fiber connectivity, suitable land and construction conditions, access to capital, professional design and operation team, and the most important, a clear customer or commercial plan. This path is not for every site, but for the right site, the value of the power and the infrastructure may be much greater than value of the existing mining equipment. So this trend is not really about miners suddenly becoming AI companies. It is about something bigger. It is about the change value of the compute infrastructure. Step 5. The future of the compute infrastructure. For many years, the mining industry focused mainly on the machine, which ASIC has more hash rate, which machine has better efficiency, which machine has fastest payback. Those questions still matter, but the industry is moving toward a wider view. The future is about the compute system, power, cooling, network, racks, software operation, and the ability to support different types of computing equipment over time. Today, the workload may be Bitcoin mining. Tomorrow, part of the site might support AI inference, rendering, or high-performance computing. The hardware will continue to change, but power-ready and well-operate infrastructure will remain valuable. This is shift we are watching from selling machine to building compute system, from focus on the hash rate to managing power, cooling, and reliable compute. And that is exactly we mean what we say from power to compute. At PunkHash, we see Bitcoin mining and the AI infrastructure as two parts of the same compute industry. But we also believe every project should begin with an honest site assessment. How much power is actually available? Is the power stable or flexible? What cooling system is already installed? What network connection is available? How much space can support high-density equipment? And what type of customer and workload will use the capacity? We do not believe every mining farm should become an AI data center, but we do believe many mining operators need to understand to the future value of their power and infrastructure. PunkHash works across ASIC equipment, air and hydro cooling power distribution, high-density racks and compute infrastructure planning. Our role is to help customers understand what their site can support today and what is could support in the future. If you operate a mining site with available power capacity, send us 4 things: your location, your available power capacity, your current cooling system, and your future is planned. And we can help you evaluate wherever the site is better suited for ASIC mining, infrastructure upgrade, hyper compute, or future AI deployment. So why are Bitcoin miners become AI data centers? Because the real opportunity is not only in the machine. It is the power, the infrastructure, and the ability to reliable compute. But remember, a mining farm is not automatically an AI data center. The right transition begins with the right infrastructure and the new commercial plan. I'm Arvin from PunkHash. This is PunkHash from power to compute. Thanks for watching, and I will see you in the next time. Bye bye.